So now let's cover how to actually buy stocks on Webull. Now it's a very straightforward process. Let's dive into my phone. I'll show you exactly how it is done. So what you're going to do is, say you're on the home screen here, you're going to tap on this middle button. It's going to take you to your investment account. It might ask you for your trading password, which you'll have to put in. I've already put mine in, so it did not ask me for that. What you're going to do now is go to quick trade, and you're going to type in the ticker symbol or the name of the stock that you want to trade. So let's say that I want to trade some Zynga shares. I'm going to go to Zynga. I'm going to select buy over here, you can see, and you can select what kind of order you want to put in. So there are a number of different order types that you can use when you're investing in the stock market. Now, I'll go through each of these, but as a beginner, you're probably going to want to use either a limit order or a market order. These are the most simple types of orders, but I'll go through all of them just so you understand how they work. Now, a limit order, basically how a limit order works is you set a limit price that you are willing to pay for that particular stock. So say, for example, with Zynga stock is trading at about $10.31. You can see that up top right here. I could set a limit order saying, hey, I'm willing to pay $10 flat for this stock, and if the price of Zynga fell below $10, then my order would trigger and I would purchase Zynga at the best available price. Now, that is a limit order. That's the limit price you're willing to pay. A market order, on the other hand, is basically just buying at the best available price right now. So if I put in a market order, the price is now dropped to $10.29, so maybe my order would execute for $10.29, maybe for $10.30, but usually pretty close to the current price because these are real-time quotes on Webull. So that's a market order. Now, in terms of a stop order, this is kind of the opposite of a limit order. So with a limit order, you're setting the maximum amount that you'd be willing to pay for the stock. If you're doing a buy stop order, then you're setting kind of the minimum amount that the stock would have to break through in order for you to buy it. Now, the OTO over here, this is one triggers the other. And this is if you're stringing together multiple different kinds of orders. This is like way beyond the scope of a beginner's guide to Webull. So you don't really have to worry too much about that. But yeah, in general, you're going to be using either a limit order or a market order. A market order is best if you are kind of like a long-term investor. You're not really too worried about like, I don't need to know exactly to the penny what my order is going to execute at. But if you're kind of doing any short-term trading or swing trading, then you might want to use a limit order to make sure you know exactly how much you're paying for the stock. Or if it's a very volatile stock that could move a lot, then you might want to use a limit order to make sure that you're not paying too much for that particular stock. But in general, I tend to use market orders for the most part because I'm a long-term investor, so I don't really tend to worry too much about the pennies. But if, again, like I said, if you're a shorter-term trader, the pennies might add up, so that could make sense for you. For me, I'm just going to do a market order right now. I'm going to buy one order of Zynga. You can use this slider here to select how many shares you want to buy, and this will kind of give you the percentage of your cash that you're going to invest in this particular stock. But I'll just use the plus button over here to go up to quantity of 1. Time in force is going to be day. So you can select either day or good till canceled. So if you select day, then if your order does not execute by the end of the day, this won't really apply to market orders, but say you're doing a limit order and it never gets below that price that you need to execute at during the day. Well, if you set your order to time in force today, then at the end of the day, the order is going to cancel and it won't carry over to tomorrow. But if you set a good till canceled or GTC order, then if you make the order and it doesn't go through today, it's going to stay open until you actually cancel that order or until the order executes. For a market order, it really doesn't matter because the order is going to execute today because it's going to execute immediately at the best available price. So I'm going to do that. You can also set to take profit or stop loss. And basically what this is going to do is if you're a shorter term trader and you know what your entry and exit points are. So say you know, okay, I want to buy Zynga stock right now for $10.32. And if it goes up to $11, I want to sell and take my profits. If it goes down below 10, I want to cut my losses there. You could set that up down here by setting your limit price and your stop price like we talked about before. But personally, I'm not going to do that because again, I'm a long-term investor and I'm not looking to make these shorter swing trades here. So once that's all set, what you're going to do is press buy. I'm going to press confirm. It's going to load. And boom, order filled. Notice your order to buy 1 share of Zynga has been filled. It's $10.32. So as you can see, current price is $10.31. My order filled at $10.32. So pretty close to the market price, but there's going to be some fluctuation there in most cases. So now we can go into my positions. We can see that I just added 1 share of Zynga, so I had 4 shares before. Now I've got 5, and we can tap into here just to see my shares of Zynga as a whole.